Welcome back to the video. I'm going to get straight to the point. What's happening with the SP 500, the Nasdaq 100? Is the market going to continue to crash? Or are we going to continue to rise like we have been on the past week? And how we know everything that is going to be playing out this week regarding the very big news that will be released Wednesday and Thursday. Before I get into that, I have to ask you to consider doing two things. Consider liking and consider subscribing. Now, the thing I'm going to be talking about today, a lot going in depth, is a lot of your comments. So everyone's reacting and kind of wondering why I'm not talking about CPI. And I'm going to go specifically in detail with that in this video and how we can trade this week to make more money. Now, obviously, can't talk about any trades I'm doing because it's the weekend. And this is more of a getting you prepared for this trading week in general. Now, the first thing I want to talk about is going to be the overall chart and where we're at right now, specifically on SPY, and then we'll get more into the Nasdaq, which again is my most important charting aspect that I'm always looking at. Now, if I'm looking here, you're struggling in about this range right here, which is kind of where you stalled out last time, which we're going to talk about here in a second because June 10th was very, very important. So you stalled out in this area. You can see you kind of topped off here. You're topping off once again here, making a lower high as of right now. Now, when I mentioned this, I mentioned there was a double top here as well, but I think there's more we need to go in detail with this as well. So I believe you're going to have resistance 392, 393 S&P. That's really where you're struggling at. That's where I kind of see us going. If you look at ES futures, it's about 39.40 where I believe you see yourself going. So those are the key levels we're watching. You also do have a little bit of a wedge coming in here as a play. But the big thing I'm looking at is going to be Nasdaq. And again, if you're looking at this range, how would I be looking at this? I'd be looking for calls around this area here. And then on the top side of here, you'd be looking for puts because what are you expecting? You're always expecting to get rejected from resistance. That's always the play unless you break out. So if you get a breakout, then a retest, then again, you're looking for calls there. So what are you looking for right now off the bat? You'd be looking for puts here going back down. If you have not already established any type of long position, that would be the quote unquote day trading aspect of this play. But what I want to talk about is Nasdaq and CPI and a few things surrounding that. I've done the liberty of already kind of charting everything out, making it a little bit easier to look at before we get in detail with this video. So what we're going to do is look at the 15-minute chart. Actually, you know, we're going to do the 1 hour chart, just get a broader look. I'm going to talk about some of the trends that we have been facing here. This is ultimately the past 2-3 months of trading. I'll bring up the opens indicator so we can get a better time frame. Each red line represents one whole month, so that's one whole month there. This is the new month going on now. Now, when I'm getting into this, I have a few things that I have highlighted that I want to talk about. So I want to actually minimize that so you can see. So we have the trend that you did break. That's when we kind of flipped to a bullish narrative. You held above 12,000, very strong. You're pushing up. Key levels we're watching on Nasdaq before we go any further is you're looking for a break of 12.25 to 12 to 12.3. 12.3 is going to be a pretty big level. You can actually extend this a little bit more to the upside. If you get above this level, where are we targeting? 12.8 to 12.9. That's our next target. On the low end, 12.75. So you have a lot of liquidity that is, in my opinion, just vacant. So you have a lot of potential room if you break above this. Once you get that retest, so if you break above a retest, you are looking for potential massive upside, about 400 points, similar to how you traded on Friday when you retested that 12,000 area, instantly pushing back up. And that's what we were playing in Discord. But looking at this right now, what are we looking at? So looking here, I think you are setting up with a pretty strong pattern. You're looking very good breaking out of this pattern right now. Now, I said on S&P, I didn't like it as much, but Nasdaq continues to look very bullish. So looking at this range, I'm not looking for any more longs or any more calls going into this week until we get back above 12.3. If you get above 12.3, then you're full bull. You're looking for more anticipation, more upside. If you get below 12,000, I've already said it, you're looking for downside. So what are we looking for? You're looking for a break. You don't really care about anything else. You get above this level, pushing to 12.3, boom, you're bullish. You get below this level, 12, you're bearish. That's the only play here. This area here is pure chop and day trading activity. You can do that if you want. That's going to be a lot of scalping. But if you're playing that, you have to short up here and you have to get longs down here every single time to make sure you're statistically going to have a better opportunity to win. You have to play it both ways, whether you like it or not. But the big thing we're going to be looking at here is CPI and PPI, which a lot of people aren't talking about PPI, which we could argue that that might be more important. So what we're going to do is really quickly go over to investing.com. This is all the activities going on for the week. I'll zoom in just a little bit. I've kind of gone over everything so far. The only two major things, in my opinion, are going to be CPI and PPI. You have some core spending, and I'm not really too Excited about that. Don't think it's going to be that big of a deal. But going into Monday, there's not too much going on. You do have some interest decisions that's going to be made for other countries, which could be interesting to see how inflation is hitting other countries and how quickly they're raising rates. But again, nothing too much there. So you have the EU doing that. Short-term energy outlook. This is one of the aspects that is going to be interesting for the market, not so much for Nasdaq or SPY, but oil in general. Because if you don't know, I made a video the other day going over oil. I told everyone this was in your demand zone. Buy. The last time I told you to buy was down here, and you ran all the way back to 125. Just giving you a heads up. Now you're bouncing once again. That's also good there as well. Go back to NQ. And then we're going to go back over here to investing.com. Now, Wednesdays when things get interesting because, again, that's when you start having your CPI. So you have CPI coming out there. Now, I did the liberty of going back and tracking some of this data. So CPI, if you go to the investing.com, you actually see the last time they had this. So you can see June 10th and May 11th. So I'm just going to go back and backtrack the last two sessions here. That's all I'm really interested in, right? So if we go back here on Nasdaq, okay, the red ones highlighted are going to represent your CPI. CPI here, when it came out, you tanked. CPI here, you came out, you tanked. So the past two CPIs that have come out, you have dropped drastically. How they performed, they both grown. The first one grew by 0.2%, which was a pretty big grow. And then the next one grew by 0.1%. So it actually stabilized and stayed the same, but they anticipated it would drop from some of those rate hikes, which it did not. So the forecast here is 6.6%. We'll see what happens. If it comes out flat, it's hard to say what's going to happen. March, we did have a drop down there as well, but that was heavily influenced by Russia and things like that. However, we're going to have to see what happens here. So coming in here, I would have to anticipate it comes out at least 0.6% or maybe even drops a little bit. Why? Because they've done a very aggressive hike on the last one with the 0.75, and they talked about in the Fed minutes at 0.75 to 0.5. I also want to mention in this comment, people are talking about this as well. On Wednesday, the fact that a full point hike might be coming very soon. I don't think it's talking about happening this week, but the next, I guess, interest rate decision. In my opinion, that will not happen. I think that's why they're sticking with 75. That's the worry about doing a 75, though, is you're going to continue having to do those for at least two sessions, most likely. So I expect that hike. And then again, on Thursday, you have your PPI coming out here. And this is on investing.com. It's absolutely free to be looking at this. There's an app as well. It gives you time and stars so you can see how important they are. But PPI coming out right here month over month. Now, PPI, why did I mention this one? PPI. So you've seen your CPI comes out, you drop, PPI comes out, and you pop back up. CPI drops, PPI comes out, pop back up. You did drop back down, but you quickly found a bottom once again. But right here, going back to April 14th, PPI came out, and that set the tone for everything that came from that point of April. Now, if we highlight this point right here, you can see PPI obviously set the top of the market right there, in my opinion, at April 14th. Right there, 1, 2, 3, 4, 5 touches, give or take. Going back to PPI, what happened on that day? Go back to April 13th, April 14th, whatever day that was. That is the only day that PPI grew. Every other time, it came exactly out to the forecast. So if I'm looking here, I am definitely going to keep my head on a swivel. I'm going to be watching this key data point. PPI arguably will be more interesting for the market as a whole. And you're going to be wondering why. CPI gives a better measure maybe of inflation. It's hard to say. Don't really know. But it's mainly by manufacturers. These are price of goods sold by manufacturers. Consumer price is not specifically by manufacturers. It's the price of everything, goods and services, excluding food and energy. Perspective of the consumer. So it's from the perspective of me and you, not the big businesses. Because ultimately, if big businesses are doing good, the economy isn't going to be getting hit as bad as that may sound to you, the consumer. So looking at that, the one time it came out bad, what happened? We never broke past that point. And actually, you had one of your worst drops of this whole entire drop. You dropped literally almost 2,000 points without seeing any type of upside. That was pretty drastic. And again, no one's talking about PPI. We're all mentioning CPI. So what are we looking for here? I'm looking to see, one, how does CPI come out, which is our first one that will be coming out Wednesday. If it comes out just at 0.6, cool. I don't think we have a massive drop, maybe a little bit of a drop. But ultimately, as long as they get it to a forecast, I think that's going to be overall good news. PPI. If this comes out and this grows whatsoever, I would be very, very worried, and I would be anticipating some key downside very soon. And then again, I would really anticipate GDP to come out very bad, right? Because if manufacturers are doing bad, then I think you will do bad. Okay, so if it's just the way the market goes. If the rich do bad, chances are the poor are going to do even worse. That's what I'm going to be looking at there. And then again, you have your retail sales. Sorry, that got disconnected there, which is going to be into Friday, I believe. I want to make sure. Yeah, Friday, you have your retail sales. I anticipate retail is going to keep going down. There was no reason for retail to really be going up or going into summertime months. People are definitely being hit financially. Gas prices are hitting everyone. You're kind of seeing a small drop right now in gas prices. But again, as I showed you on the chart, you're at that demand zone. And in my opinion, you got to be anticipating more potential upside. Just saying here, specifically if the market does bounce as well. So I think energy is going to hurt. I think, oil is going to go up, and ultimately consumers are going to get hit here. That's my opinion. That's how I see us moving. So if you have questions about that, please comment down below. Now, with PPI and things like that, some big red flags here. In my opinion, you're seeing yields popping back up. This is the worrisome part. You saw junk bonds. Yeah, junk bonds were bouncing very well, which again, if you go back to those key days, we had a lot of those bounces. Junk bonds tend to lead here. And you saw junk bonds really moving the market here, really moving very strongly on Friday and Thursday. Only upside. There was only upside Thursday and Friday. Just want to highlight that. Even though the indexes kind of dipped, junk bonds continuously went up, which indicates that there was a lot of risk in the market. So what I'm going to do is come back to the Nasdaq, and I'm going to bring up the opens indicator so I can kind of highlight you with how I see a movement going to happen this week. And I want to be very clear about this. This is just my opinion. Do with it what you want. Really don't care. Do what you got to do. I anticipate going into this week, you're going to get some slower movement Monday and Tuesday to the upside, most likely. That's just how I see us moving. Favorable to the upside until you get data points. Just my opinion. But nonetheless, a lot of slow movement, lower volume type days. Going into the remainder of the week, I anticipate more movement. Up or down, I can't give you an answer because I don't have the data in front of me. And I'm not going to have the data until Wednesday and Thursday. Those are going to be your big days. But the good thing about that is you're going to get your decision early in the morning, so you should have decent movement throughout the remainder of the day. Also, the other important aspect to know is that going from CPI, although you've seen very big drops from CPI, what have you saw from PPI? So CPI will bring you down, and then the next day or next 2 days when PPI comes out, you usually shoot back up. Am I saying you're in a V-shaped recovery if you drop from CPI? No, but it's something that you need to be watching for so you don't get stuck into positions or holding a position too long. Because as we've been trading in this market, the biggest thing that I have seen is people holding trades too long. That's even been some of my mistakes in kind of slowing the growth of some of the accounts that we have, right? And so that's the concern for me, is as you're hitting these resistances, is taking some of those profits off the table. Even though I'm looking for upside, I'm not holding every single call position I have. I closed a lot of my positions, left a few runners for more potential upside, and those positions are dated. I'm not interested in holding positions extremely long amounts of time. Specifically, I don't want to hold anything overnight unless I have a very good setup in that position. Like when I got into those calls on Microsoft that I'm currently sitting in, one of the only trades that I do have, I got in down here right at support. Now that we're up here, I have a lot of room to go, and I've already trimmed it by half. Those positions were already up almost 50 to 60%, and they were for 2 weeks down the road. So that's what we're looking at here, and that's how I'm playing the market. But that's the biggest thing I want to say to you guys, is as you're coming to resistances, don't get greedy to the point of holding these things all night and all day, because chances are you're going to start giving up some of those profits. Even with Microsoft going into Friday, we were up almost, I think it was like 50, 56%. Going in here, you drop back down, and those positions got almost back to break even, but then you popped right back up. Reason why I trimmed half of them at these highs once again is because of how we were moving. But looking at the market, in my opinion, I still think you have some strength going into Wednesday, but CPI, PPI, only time will tell how those data points come out. It's also important to note, going back to this comment, people are worried about, I've seen your concerns, I see all your comments, and if you have comments, please continue to comment. I want to answer your questions. But as far as a full point hike, I don't see that coming unless we have very bad data reports. It would have to be catastrophic for them to want to push out a full point hike because they just did a 0.75. If they did a full point, then they would probably lean towards a 0.5 hike coming out right now. But they didn't. They did a 0.75, so they're prepared to do another 0.75 come this time. Also remember, they made the decision to actually move from a 0.5 to 0.75 overnight last session. That's a very important aspect to know, is that trying to anticipate what the Fed's going to do is damn near impossible. So don't even try, because you'll keep yourself up all night. This is what I have for the week. This is how I'm going to be looking at it. Some key trades that I will be looking at and that I'm watching right now. This is the Big Six, just so you know. This is a chart basically that you can make on TradingView. What you do is you just type in your ticker. Let's say I want to look at Apple, and then I'm going to add the plus sign, Microsoft, whatever stocks I'm looking at, right? So basically what I did was 6 of the biggest stocks that I like, right? Apple, Microsoft, Nvidia, Google, Amazon, Tesla. So even though if you look at a daily chart on something like Nasdaq or SPY, you might not see pure green candles every single day. However, the Big Six has since then seen that. Key aspects that I'm looking at, someone was saying, is this a bear flag? I see continuation. I see this. I see that. This is all just my opinion, people. So don't get offended when I tell you my opinion. But in my opinion, you are making higher lows. And you did just make a higher high from this level. I'm just saying, as you're looking at this, you did just make a higher high out of that level. That does look good. Are you above resistance yet? No, you have not. That's why this looks so similar to something like NQ. As you look here, you're back at that level. So when you're looking here, I'm looking at all these signs that are pointing right now. I see the potential for more upside. I see the potential if PPI and CPI do come out just break even there, that we could see a nice bounce. Again, the longer term signs point for more downside, but right now, short term, I have to play it both ways. Long term, once again, yields are going up. DXY dollar value still is going up. These are all key signs, in my opinion, that the dip is not over on a broad base over the next few months. But in the short term, again, what do we know about getting big market crashes and recessions? That there is extremely, extremely volatile periods in between those times. So if we go all the way back, just for laughs, going all the way back to the last time we had any type of crash, we're going to go all the way back to 2008, really back here. And we're looking at 07 through basically 09. This was an extremely long crash and something that you could be looking for. But look at these dips. Massive dip, pump back up for almost 2 to 3 weeks. Massive dip, come back up, double bottom, back up, and it's just continuous up and down, up and down. And you're seeing very big seesaws back and forth. It's worth mentioning, you didn't see a very big, one of your biggest dips on the 08 crash all the way until halfway through the crash in September, which started ultimately back in October of 07. So a whole year passed before you saw that massive drop. I'm just saying right now, we're just getting started. If you go all the way back here, this started in December roughly. It was when we had our highs, or January. The beginning of January is when you had your highs and you're dipping down here. Am I saying you haven't seen your biggest crash yet? No. But anything is possible. And you need to be looking at the last time we had any type of circumstance like this. And unfortunately, that was back in 08. That's to wrap the video up. If you got anything else, please consider liking and subscribing. See you tomorrow.